Pablo, good to see you. How you doing? How you been? How's things, Pablo? Evening, Miles of CMF. Talk, good to see you. How you doing? How you been? How's it going? Pablo's going great. How's it going with you? How's things? Evening, hope you're well. Pure, I'm doing great. Good to see you. How you doing? How you been? Feeling better. Better enough to be able to do the live and not sit on the sidelines. Good evening, Miles and all CMF. Welcome back. Let's go, JP. Good to see you, brother. How you doing? How you been? Good evening, Miles and family. Good to see you as well. How you doing, Ian? How you been, Ian? Hey, brother. Miles, hope you're well. I'm doing better, comatose. Good to see you. How you doing? How you been? Hi, Miles. Good to see you again. Autistic. Good to see you as well. How you doing? How you been? What's up, Miles? What's up, CMF? Kerry, good to see you. How you doing? How you been? Shelly, morning, Miles of CMF. Great to have you back. Good to see you, Shelly. How you doing? How you been? Good afternoon, Miles of CMF. Good to see you. Free Feather. Good to see you. How you doing? How you been? Evening, Miles of CMF. How you doing? Joe, good to see you. How you doing? How you been? Great. Glad to see you back and better. Let's go, Pablo. Hello, Miles. Hope you're feeling better. T, I am feeling better. Good to see you. How you doing? How you been? Now, it is great to be back. I got tired of sitting on the sidelines waiting for doctors' results and, see what's happening next. I thought in the meantime, I am feeling better and I don't want to sit on the sidelines waiting for doctors', phone calls and results, even though I had another phone conversation with my doctor today regarding my health. But I'm doing better. I'm doing a lot better. The results, I had my blood test results today. A lot better. Do have to repeat 2 of them, but the rest were all okay. No major issues whatsoever, which is all good to hear. But yeah, I thought, I could just come back on the live and, whatever happens with the whole doctor results. Now, a lot of things have also happened since I've been away, because of this illness that I have. So a lot of things have happened. A lot of things have happened around the world. The Iran and Israel situation with the ceasefire, which I don't believe is a ceasefire in any sort of a way. But also with, essentially Trump's trade tensions that are going on, with Europe now is always going to go through on tonight's live. Russia situation, India situation. India essentially said they don't want to be a part of BRICS anymore, and they would rather back the US dollar currency than creating some sort of BRICS currencies. What India's recent announcement was. We have announcements coming in from essentially South Korea, who are essentially getting closer to regulations for stablecoin regulations, just like the United States is. We have major news coming out of the United States in terms of, Trump's big announcements for cryptocurrencies, the market movements. A lot of things have been happening. But before we go through any of those things, just want to say to everyone right now watching, welcome to the CMF Live Show. If you're watching this for the first time, the CMF stands for Crypto Miles Family. My name is Miles. I host this live that you're watching. You can tune in Monday to Friday, 10 p.m. London time, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything you need to know about regarding the world, completely transforming into this digital space we're about to be living in. And also, we do Q&As on this live, which means if you do have any questions or any comments to make, essentially put it down inside the comment section. I'm more than happy to answer the questions you may have. And disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, welcome to the CMF Live. This is episode 323 of the CMF Live. Thank you so much to thanks so much to everyone who has already liked this live, retweeted this live. I can see Free Feather just retweeted this live. Thank you so much, and liked the live. Thank you so much to everybody who has liked this live, who has retweeted this live. JP just retweeted as well. And if you haven't done that, just take 5 seconds to like this live, retweet this live. And if you're watching us on YouTube, drop a like as well. Drop a comment outside the live. Hashtag Trump, hashtag crypto, hashtag XRP, whatever you want, go wild. Now, a lot of news to go through essentially on tonight's live. And the first news we are going to be covering essentially is the tax situation. And also quite a lot of interesting news to go through on tonight's live as well, that some people should be aware of what's happening around them. But the first news we are going to be covering tonight's live is regarding taxes, and mostly to do with Trump and China situation, which does impact the global market space. Stock market gets affected, which ponders onto the crypto market space, because sometimes Bitcoin reacts like a tech stock instead of just like a cryptocurrency. So here it is. Trump's administration imposes tax on Chinese renewable components, which has caused some sort of a stir inside the market space, but the crypto market space has reacted well to the news, you could say, and gold as well. President Trump introduces a tax on renewable projects with Chinese components impacting major US companies. The tax signifies another shift in energy policies, affecting stocks and raising consumer bills by up to 10%. The Trump administration has imposed a new tax on wind and solar projects utilizing Chinese components. This move accelerates the phase out of existing tax credits impacting key players like essentially Next Era Energy. President Trump is central to this policy shift, contributing to a history of tariffs on Chinese imports. Senator Lisa suggests amendments essentially targeting tax credit eligibility changes. The new tax impacts essentially major U.S. renewable energy companies, with stock prices for firms like Next Era Energy and Emphasis Energy dropping significantly. Elon Musk even criticized the bill and its destructive implications. The economic implications include an estimated increase in energy bills by up to 8% to essentially to 10%. And the tax threatens the financial visibility of the new clean energy projects, adding about $4 to $7 billion in costs. Utterly insane and destructive, this bill will destroy American jobs and harm the country's strategic essentially interests while favoring older industries over emerging ones. We can all see that there's again some situation between Trump and essentially Elon Musk. The first time around I didn't believe it. I'm not going to believe it the second time around either. And past tariffs during the Trump era created similar trade disruptions as well. Previous China tariffs reached up to 145%, as everybody remembers, sharply impacting various industries, including renewable energy, as noted by articles from sources like essentially Brookings. Now, data suggests that projects without Chinese components may become essentially economical. Experts warn that the bill could shift energy sourcing to overseas, challenging U.S. competitiveness, as discussed in Energy Outlooks and reports. Gold prices have surged, raising over 25% in the past 6 months, reaching historical essentially heights by June 30th, which is today in 2025, and they're considering around essentially $3,300 per ounce. The rise in attributed global market uncertainties and persistent geopolitical tensions that's going on, especially in the Middle East. Market analysts predict further implications of financial landscapes globally, with traditional and digital currencies reacting diversely, and the gold rally has led to varied performances in cryptocurrency markets. The cryptocurrency market, surprisingly, is actually doing quite well during these times of uncertain trade battles that are going on and actual war situations that are going on. Performance in cryptocurrency markets showing both opportunities and risk for essentially investors. Gold has seen substantial rises, topping 25% in 6 months. The growth echoes historical economic cycles, drawing parallels with the notable surges in the late 1970s and 2007. Key figures such as essentially Rona from essentially StoneX highlights that global uncertainties continue to fuel this trend of gold climbing in price. The easing of political tensions and trade agreements could influence short-term market behavior. Analysts indicate that these developments may not favor gold, but potentially benefit even silver. Reactions from financial markets illustrate a complex environment. Bitcoin's performance relative to gold suggests a stronger appeal among newer investors, while Ethereum's slight downtrend points to essentially a cautious financial sentiment. Bitcoin's essentially trading around $107,000 as of June 30th. It holds a 64.41% essentially market dominance, with a market cap of around approximately $2.13 trillion. Over essentially recent periods, Bitcoin has experienced price fluctuations, including a 40% rise over the 7 days and 26.23% essentially increase over the last 90 days, according to CoinMarketCap. As economic, geopolitical, and essentially political uncertainties persist, the gold rally is likely to continue, benefiting essentially from systematic volatility. And the only essentially threat the yellow metal essentially faces now is a massive reduction in risk, essentially said by Rona, once again, from the head of market analysis at StoneX. So this uncertainty situation that's going on with the Middle East, the uncertainty situation that's going on still with the trades, and well, the cherry on top of Jerome Powell essentially still not doing any sort of rate cuts for the market space, and Trump is looking into essentially firing his ass out the door, you could say, pretty much. But crypto markets holding up quite well during all these uncertainties with Israel and Iran and the trade tensions with US and China and Europe and so on. crypto market is actually holding up its value. You could say pretty much well. We have had drops in the past few days, but nothing drastic to essentially send out alarms for everybody to be panic selling in any sort of a way. Now, on the topic of cryptocurrencies actually doing well and standing their ground, you could say in times like this, stablecoin legislation, big deal, very big deal for the crypto space, because it essentially shows that the crypto space is maturing as we like to see it, because a crypto space that's maturing brings a lot more investors to the table, traditional investors who have a lot of money. So here it is. Stablecoin legislation gains momentum with potential mid-July essentially completion. Janet Yellen, the US Treasury Secretary, announced today that the stablecoin legislation might be finalized by mid-July, creating a new demand for US Treasuries. This potential legislation addresses safety soundness and regulatory clarity in stablecoin markets, impacting reserve assets and the US financial systems. US Treasury Secretary Janet Yellen's statement today highlighted the immediate completion of stablecoin legislation happening by mid-July, which could signify impact and essentially impact the financial market space, impact the crypto market space. Yellen emphasizes the urgency in essentially regulating stablecoin arrangements due to their growing role in the financial system and urging swift federal essentially action as stated in the press releases today. The expected legislation will essentially formalize the regulatory environments essentially for stablecoins and potentially increasing the demand for US treasuries as a reserve essentially backing. As a result, financial institutions and fintech firms face direct effects through restricted essentially firms and issuance to regulated entities. Yellen's essentially remarks underscores the legislative urgency in crafting cohesive framework for stablecoins to be able to, have some breathing space. Because in the past, obviously, stablecoins, cryptocurrencies, anything to do with crypto didn't really have any breathing space because of Gary Gensler. But now he's gone for a while now, and we have legislations on the table. We have a stablecoin legislation, an actual crypto legislation going on, a reserve legislation. So it is time to pass something for the crypto space now. Janet Yellen's US Treasury Secretary emphasized how recent events have underscored the urgent need to ensure that stablecoin arrangements are subject to federal framework and essentially a consistent on comprehensive basics, and highlighted the need to continue constructively engaging in essentially serious legislative efforts to promptly put into place a regulatory framework for stablecoins. The stabilization in the stablecoin sector could mitigate systematic risk essentially within the blockchain sector, and increased regulatory clarity may also bolster confidence, encouraging greater institutional participation, as outlined essentially in the Solana essentially S1 filings today as well. The legislation marks a significant step towards integrating digital currencies into the mainstream financial fabric. It is incredible news regarding what's coming out of the United States mid-July. If we get essentially mid-July happening regarding stablecoin regulation, stablecoins can thrive. And if you're thinking to yourself, well, this could only be beneficial for stablecoins or one or two stablecoins, like essentially USDC or USDT and so on. Well, according to JP Morgan, which we're going to go through today, essentially on today's live as well. But according to JP Morgan's recent announcements and reports, they see that it's not going to be the stablecoins you think that are going to be leading the way. There's going to be a surprise stablecoin. And I think we all know what that surprise stablecoin is going to be. It's going to be RLUSD. But anyways, putting that to one side, because we'll get back to JP Morgan as we carry on. But it's not just essentially the stablecoin act that they're saying mid-July is going to be the pass. And it's going to give a massive confidence boost to the crypto market space. It's going to bring a lot of investors to the table from Wall Street, from everywhere in the United States, and even around the world. But here is one other thing that's also being looked into right now to be passed inside the United States in terms of regulations, which is this. Senator Cynthia Lummis proposes a minor tax reform for crypto assets and Bitcoin. Senator Lummis' proposal seeks to alleviate the tax burden on Bitcoin miners by essentially eliminating double taxation, a move anticipated to improve profitability and competitiveness. Bitcoin mining corporations all moved to the United States when China essentially banned Bitcoin mining a very long time ago. Every single one of them pretty much moved to Texas. Some moved somewhere else, but the majority moved to Texas. And essentially, previously under the previous administration, Sleepy Joe's administration, Bitcoin mining corporations were heavily being looked into, and in some cases stopped from essentially mining Bitcoin, in some cases being taxed heavily as well. So they had so many troubles and hurdles to essentially jump through. Well, Saint Illuminous wants to take away all their troubles and hurdles and let the Bitcoin mining community thrive inside the United States. The initiative, spearheaded by Senator Illuminous, seeks to essentially redefine current tax laws that categorize Bitcoin miners under strict broker rules. Now, this reform would eliminate double taxation, encouraging more investment in US crypto infrastructure. By advocating for the congressional essentially process, Luminous aims to essentially expedite legislation changes on taxes, avoiding essentially anticipated bipartisan disagreements. As Senator Cynthia Luminous stated, current tax laws make such transactions difficult and impractical. The proposed tax reform is expected to improve profitability for Bitcoin miners, fostering essentially greater institutional investments into US crypto infrastructure. This change would position the US as a more attractive market for crypto businesses to essentially come to. Financial and regulatory implications involve reducing essentially operational costs, which would increase Bitcoin's attractiveness to investors. Market dynamics could shift with more competitive conditions for US-based crypto essentially entities due to the proposed tax advantages. Historical precedents such as the 2021 Infrastructure Act impacting on crypto markets highlights the significance of essentially a regulatory clarity. If successful, Luminous proposal could lead to increased trading volumes and capital allocations in US markets, benefiting both Bitcoin and potentially other digital assets. Senator Cynthia Luminous's US Senate noted that this intent repeals essentially of double taxation on block rewards will improve miner profitability and cash inflows, making the US a more competitive crypto business sector. The US, I'll be honest, is looking essentially as the days go by, as the legislations are being looked into, what could be passed, what cannot be passed, to make life much more easier for crypto companies, for crypto users, so on. The US is becoming attractive as time goes by the looks of it, which is brilliant to see. Now, that's not the only essentially thing that's being looked into or being passed, and that's a positive for the United States. What's also coming to the United States and also European countries, which we'll go through a little bit later on tonight's live, is tokenization. But tokenization of stocks, which is something that's been talked about in the past. There's been filings that's been made on it, and some European countries have started regarding the tokenization of US stocks to be sold to them, which is brilliant to see, once again, the blockchain space connecting, traditional financial space connecting to the digital financial space. So here it is. Kraken X stocks. Revolutionary, essentially 24/5 trading unlocks 60 tokenized US stocks for the US market space. Essentially, a systematic shift is underway of the world's digital assets and traditional finance, and leading the charge is Kraken, one of the cryptocurrencies industry's most established exchanges. In a groundbreaking announcement made on essentially X from Kraken, confirmed the launch of Kraken X stocks, a pioneering feature that allows for 24/5 trading of 60 prominent tokenized US stocks. This isn't just another product launch, it's a significant stride towards integrating traditional financial markets directly onto the blockchain, promising essentially unprecedented accessibility and flexibility for traders worldwide. If you ever felt limited by conventional essentially market hours or sought essentially greater fractional ownership in blue chip companies, this development from Kraken is poised to capture that attention. Kraken's announcement is more than just new products. It's a clear statement of intent regarding their long-term strategy to integrate traditional financial markets to the blockchain space. Now, this vision is shared by many inside the crypto space who believe that blockchain technologies can revolutionize not just new essentially asset classes, but also existing ones. The benefits of essentially bringing TradeFi on chain are essentially manifold. You could say these are essentially the points that they put across of why tokenized stocks makes a lot of sense. Also, tokenized stocks brings a lot more eyes to the crypto space. Once again, brings a lot more money towards the crypto space. And the projects that are chosen essentially as the backbone of these tokenized stocks, well, their chain is going to get flooded with liquidity. Efficiency. Blockchain-based systems can automate many processes, from settlements to record keeping, and reducing costs and increasing speed. Programmability: tokenized assets can be integrated into smart contracts, enabling new financial products and services, essentially, such as automated lending, collateralization, and complex derivatives that are difficult to implement in traditional systems. Interoperability: as more assets become essentially tokenized, the potential for seamless interactions between different asset classes and financial platforms grows, fostering a more interconnected global financial system. Kraken's foray into tokenized US stocks is a testament to the ongoing evolution of the financial markets emerging together. It represents a bold step towards a future, essentially, where lines between traditional finance and decentralized blockchain technology become increasingly blurred and they start to intertwine. This initiative, alongside others from various industry players, is paving the way for a more integrated, efficient, and globally accessible, essentially, financial ecosystem. The promise, essentially, of TradeFi on-chain is not just about moving assets, it's about reimagining how value is exchanged, owned, and managed on the global scale, all driven by essentially continuous crypto trading in essentially innovation. In conclusion, Kraken X stocks offers essentially a compelling new avenue for investors seeking extended trading hours and fractional ownership of US equities, all within the familiar environment of a leading crypto exchange, and a significant leap forward in the journey to bring traditional finance onto the blockchain, promising a more exclusive, dynamic investment landscape. As Kraken plans to essentially additional listings, the impact of this move on the broader financial world worldwide will undoubtedly grow, shaping how we perceive and interact with assets in the digital age. We went essentially from, nobody wanted to touch the crypto space because they saw it had no value and it was just filled with scams, to now fast forwarding 2025 on June 30th, where the crypto space essentially is helping the stock market, one of the biggest market spaces on the planet, the stock market, to essentially advance and add innovation to it and bring it onto the blockchain. These are all things that are extremely positive. It brings a lot of eyes towards the crypto space. The blockchain projects that are chosen as the backbone of these essentially tokenized stocks, it brings a lot of liquidity to the table for those assets, and once again, it makes the crypto space seem like a much more mature place, which means the crypto space can be taken seriously by traditional, very high profile investors who have a lot of money, those are the types of people we need inside the crypto space. We need their money to make our assets fly to the moon, to be fairly honest, and that's why we need regulations also. Now, before we go through the next news on tonight's live, which is regarding essentially US staking ETFs, let's go to the comment section first, and then we'll go straight into the next news. As I said previously, this is live, which means if you do have any questions or statements, put them down to the comment section. I read everybody's comments one by one. So let's go to the comment section first. Let's see where we were at, and then we'll go essentially after the comment section, we go straight into the next news of tonight's live. Let's see where we were at. We were at here. Free and Feather, good to see you. How you doing? How you been? Joe says, evening, Miles and CMF. How you doing? I'm doing great, Joel. Good to see you. How you doing? How you been? Adi says, hi, Miles. Great to see you back again, and I hope you're feeling better and fighting fit. I am. I definitely am. Great. Glad to see you back and better. Let's go, Pablo. T says, hello, Miles. Hope you're feeling better. I'm feeling great, T. Good to see you. How you doing? Good evening, Miles, and good to see you. Good to see you as well, Kali. How you doing? Pierce says, evening, Miles and CMF. Good to see you as well, Pierce. How you doing? How you been? Lena says, good evening, Miles and CMF. Nice to see you back. Good to see you as well, Lena. How you doing? Akan says, hi, evening, Miles and CMF. Jason, good to see you as well. How you doing? How you been? Funky Brother says, good evening, Professor Miles. Good to see you as well. How you doing? Boy, it's good to see you again. How you feeling, bro? You look really well. Fresh. Let's go. I am feeling better. I got tired of sitting on the sidelines, waiting for whatever this illness might be to, because all I was, I took some time off because I have a very weird illness condition. I'm not sure what it is still. They're doing a lot of testing on me. And I thought, instead of sitting on the sidelines and waiting for doctors to call me and test results and so on, or the possible surgery that I might be having in 3 weeks' time, I'm unsure of what's really happening to me. But I thought, instead of sitting on the sidelines and just essentially, waiting for results and doctor phone calls and so on, I thought, I'm just going to jump on, do the lives Monday to Friday as I normally do, and whatever happens with everything else regarding results and surgery and whatever illness or disease. I don't know what I have, so I thought it's better for me to just do the lives. And it's a great day, and I missed doing the lives, to be fairly honest. I genuinely missed doing the lives and seeing everybody inside the comment section and so on. So it's great. It's good to be back, and I don't want to sit on the sidelines, to see what happens to me. Whatever happens, happens. Now, evening, Miles and CMF. Susie, good to see you as well. How you doing? How you been? Hi, Miles. Hope you're well. Woodhouse, I'm doing better. Good to see you as well. I can't stay long. I've got to fix my sleeping routine. No problem. Woodhouse, good to see you. Good evening, Miles and CMF. Good to see you as well. How you doing? Bullocks up. Hi, Miles. Good to see you. Michael, good to see you. How you doing? How you been? In-house, good evening. Let's go, Curtis. Good to see you. How you doing? How you been? Hello, Miles and my CMF members. I am blessed and I'm glad to be amongst you. I hope that everyone had a good day. Scott, let's go. Good to see you. How you doing? How you been? Hi, everyone. Hope everyone well, especially you, Miles. Let's go. One love. Thank you so much for the kind words and good to see you as well. Denise, good evening, Miles and CMF. Good to see you. How you doing? How you been, Denise? Tanner says, I'm still learning how to use YouTube. No problem, Tanner. Good to see you, brother. How you doing? How you been? Hi, brother. CX, good to see you. How you doing, brother? How you been? Tia says, God bless you. God will forgive you from your sins. If you believe in what Jesus did for you, read the Bible and you will find the truth. You understand who is your creator and your purpose. Good to see you as well. XRP, XM, and H4 all the way. I'm all in 100%. My advice to myself. Let's go, Scott. Great advice. Good evening, Miles. Very good to see you back. Well, XRP, good to see you. How you doing? How you been? Nico, good to see you. How you doing? CX says, I'm in Dubai on vacation, but still watching. If you are giving 110%, we have to give 200% back. Let's go, CX. One love. Thank you so much for the £14.44. It's actually a donation. Absolutely amazing. Thank you so much. ISO 2200 coins, a new financial system. Yes, they are 100%. But one love. Honestly, thank you so much for the donation. Using my phone for YouTube, words are so small, having a hard time reading it. And no problem. Good to see you. Flare will bring liquidity to the XRP ledger. A lot of things will bring liquidity to the XRP ledger. Flare is also one of them. Brother, hooray, you're back, love. And it still have you my prayers. Let's go. Miles, quick recovery. Let's go, Tanner. Hi, brother Miles. How you doing? I'm doing great. Crypto Don, good to see you. How you doing? How you been? I'm good, brother. Let's go, Tanner. Now, next news on tonight's live. Shark, hi Miles, welcome back. Good to see you as well, Shark. How you doing? Shelly says, please like and retweet and place a comment outside the live CMF. If you haven't already, show Miles some support. Thank you so much, Shelly, for saying that. If you haven't done that, CMF members, like, comment, and retweet and put a comment outside the live. I appreciate it a lot if you do it. Thank you so much. Now, first US staking ETF to launch Wednesday, giving investors exposure to Solana. So, word is going around that Solana could pretty much maybe get greenlit on essentially an ETF and staking capabilities with it on this Wednesday coming. The first US staked cryptocurrency ETF, they're saying, could be launched Wednesday, allowing investors to hold Solana and earn yield through staking. 2 days after Cointelegraph essentially reported the REX, obviously Solana and staking ETF, it could launch imminently. Issuers REX shares confirmed on Monday that the fund is set to debut. As the name suggests, the REX obviously fund will give investors direct exposure to spot Solana along with staking income, potentially paving the way for a broader institutional adoption of crypto. The launch follows REX update potential prospects of positive feedbacks from the US SEC regarding its unique C Corp business structure, an agreement essentially the regulator held previously and argued conflicted with its so-called ETF rule. The SEC could essentially rule. The SEC ruled in May that staking does not violate securities laws, but still decided to punt its decision on staked ETFs and other altcoin funds. As its essentially current price, Solana has a market capitalization of around $83.5 billion, making it the sixth largest cryptocurrency. Some analysts have speculated that the approval of Solana ETFs could spark an altcoin summer fueled by new altcoin-focused essentially funds. Bloomberg Senior ETF analyst essentially Eric noted in June that several such funds were on track for approval by July, with Solana likely leading the way. Solana has already gained momentum in the decentralized exchange DEX essentially markets, with DEX volumes essentially recently surpassing those of Ethereum, and Radium and Pump.Fund Fund and Akora have essentially major contributors to this surge, according to Cointelegraph and TradingView data. So, could we possibly have a Solana, so-called Solana ETF with staking capabilities. Now, the way essentially this company is doing it is a bit strange. It's not doing it as an ETF straight up. They're doing it as they're buying it, which means you could go for their company and have staking capabilities in Solana. It's a very confusing method they're using, but if it gets approved, it's a positive for Solana. Now, and for the rest of the crypto space. Something that everybody should know if you especially live inside the United States. Also, this could possibly happen to other countries around the world, which is it's something that you should know. So here it is. The courts inside the United States have ruled that the IRS can collect Coinbase users' data without warrants, which means that the IRS can come knocking on your door because they will have access to everything you have done on Coinbase regarding buying cryptocurrencies, storing cryptocurrencies, trading cryptocurrencies. If you're in the United States, the IRS, by law, has the right to have full access, pretty much, you could say, to your Coinbase data without a warrant. The US Supreme Court has declined to hear an appeal from Coinbase users, allowing the IRS to access data from the exchange's users. The Supreme Court sided with the Internal Revenue Services in a major financial privacy case today. June 30th, the court declined to hear an appeal from James Harper, a Coinbase user who sued the IRS for what essentially he called unconstitutional overreach. This decision essentially came without explanation, a common outcome in such cases. Importantly, the courts did not impose any new limitations on how the IRS collects user data. The ruling effectively permits the IRS to access data from more than 14,000 Coinbase users originally requested in the 2016 summons. Harper appealed the Supreme Court on the grounds that the IRS's sweeping data demands violated his Fourth Amendment protections. Especially the 2016 summons saw data all Coinbase users who might have essentially misappropriated their crypto income. In a 2020 lawsuit, Harper claimed that the request constituted an unreasonable search and seizure. However, both the district and the appeals courts ruled in the favor of the IRS, citing that the third-party essentially doctrine, the courts argued that the individuals have no reasonable expectations of privacy when voluntarily submitting their data to third-party services. With the Supreme Court declining to hear the case, Harper exhausted his final legal avenue. The outcome reaffirms the IRS's authority to obtain user data from centralized crypto exchanges without needing individual warrants. The implications extends beyond crypto. Legal experts warn that the decision may further normalize broad essentially surveillance powers across financial and tech platforms, setting a precedent for expensive government access to user data. So if you live in the United States and the IRS wants to know when the time is right, are you paying your crypto taxes? They have full access if you use any centralized exchange to get your information from that centralized exchange without even letting you know. So if anybody was planning on saying that they might have lost their crypto assets on a boating accident, think twice about it, because the IRS has full access in the United States to all American citizens' data on centralized crypto exchanges. It is something that I said a while ago, about 2 years ago, when I started these live shows. I said that there's going to be a time when, companies like essentially these centralized exchanges or these wallet companies like Ledger, Tangent, and so on, that, the governments will go to these essentially companies and say, hand over everybody who uses your services, their information, that, if they're a US citizen, if they're a British citizen, the British government would say, go to, for example, Ledger and say, whoever brought a wallet from Ledger, who's a British citizen, hand over their details to us so we know that they own a Ledger. They could go to Tangent, I said they could go to any crypto exchange and do this. Well, 2 years ago I said this, 2025, 30th of June, it's showing signs where the IRS has full access to anybody's data inside the crypto space. No warrants needed if you use a centralized exchange. So if you're thinking about saying you lost your cryptos on essentially a boating accident, you lost your crypto money on a boating accident or any other accident, think twice about it, because the IRS has full access and they don't even have to tell you about it. They can just get your data from centralized exchanges without you even knowing about it. So if you lie, they know. Now, dollar-backed stablecoins have South Korean investors in a frenzy. But also there are legal ways to do this as well, as I've said in the past. And another thing is, it's always better to use cold storage wallets. This is the number one rule. No financial advice in any sort of a way. But it's always better to use cold storage wallets rather than using exchanges to store your cryptocurrencies, because they're technically sharing your information with third-party companies. And if they're sharing your information with third-party companies, that means they can easily share it to your governments. And I'm not saying anybody should be avoiding taxes, because that's illegal. You should not be avoiding tax. What I am saying is, for your own safety, a cold storage wallet is always the best option, not a crypto exchange to hold cryptocurrencies. Cold storage wallet always. And if you are looking for a cold storage wallet, I am sponsored by Tangent. You get a Tangent wallet and use my name, Crypto Miles, no spaces, Crypto Miles in capitals, and get 10 to 20% of a Tangent wallet purchase, because I am sponsored by them. Now, dollar-backed stablecoins is what we're going to talk about. So we know for a fact that the United States is, and I just want to. We know for a fact that the United States is bringing essentially stablecoin regulations, and they're making a very big deal out of it, because it is a big deal. It's a massive forward step for the crypto space. Well, South Korea has decided to follow its footsteps. According to reports, South Korea has lifted a 14-year-old ban that prohibited domestic financial institutions from buying essentially bonds in a bid to attract offsetting capital inflows. South Korea may have finally essentially gotten past the hurdle of selecting a leader with the election of President Lee, but it still has a lot to stabilize in its economy. Recent speculative frenzies in dollar-backed stablecoins is what's happening right now in South Korea. The Bank of Korea initiated the ban prohibiting local investments in kimchi bonds in 2011. Aimed concerns they would cause currency mismatches among local issuers. It has essentially stayed in place for over a decade and may have remained in place, if not for the central bank's concern over the won's weakness, and coupled with the lack of foreign currency and liquidity, as essentially South Koreans retail investors scramble to invest in overseas stocks and dollar-backed stablecoins. Reports claim trading in crypto instruments hits 57 trillion won, which is about $42 billion in the first quarter of the year alone. This measure is expected to contribute to resolving the imbalances in forex supplies and demand by improving foreign currency liquidity conditions and easing pressure on the weak won. The essentially Bank of Korea's statement reads, however, some have warned that domestic companies may not rush to issue kimchi bonds because of their higher essentially funding costs in the dollar compared essentially with those to the won. Now, what's actually happening in South Korea is quite a few things. South Korea is going through who's going to be the next president essentially of South Korea, who's going to be the next leader of South Korea, is what's actually happening over there. All the three parties in South Korea support crypto ideology. They want cryptocurrency to become the capital of South Korea, and every single one of them is very pro-crypto, which is brilliant to hear. South Korea also brings a tremendous amount of money to the crypto space, a tremendous amount. We're talking billions and billions and billions of dollars to the crypto space table. And their number one cryptocurrency purchase so far has always been, believe it or not, XRP, not Bitcoin or Ethereum. There's actually more purchases for XRP than any other cryptocurrency, and that's a fact from South Korea, according to their own data. Now, what they're trying to do essentially is reverse whatever restrictions they had on the South Korean bond market, connect it to the blockchain space, and bring some stable coins essentially to the table as well. They're trying to catch up to the US market space is what's really happening. I just read Shelly's comment inside the comment section, which says, There is an influencer going around telling people to leave it on the exchange. I couldn't believe it. Thank you so much, Shelly, for sharing that. If there is any influencers or anybody out there telling people to keep their cryptocurrencies on an exchange, you're a moron for saying that, because you shouldn't be saying that. So Shelly, thank you so much for sharing that information with me. If there is anybody out there, any crypto influencers or anybody else out there who's telling people to keep their cryptos on exchange, they're morons. There's no other way around it. Happy Pisces, good to see you. How you doing? How you been? Joe, good evening, Miles and CMF. Hope you're feeling better, Miles. I'm feeling a lot better. Good to see you, Joe. How you doing? How you been? Now, it's not just Kraken that's getting involved in the tokenized crypto, essentially stock market. Robinhood is also getting involved in tokenized stock markets. Robinhood launches tokenized US stock trading in 30 European countries, which is impressive. Robinhood has launched tokenized US stocks trading in Europe, allowing users to trade equities around the clock from Monday through on to Friday. The move brings 150,000 customers across 30 countries direct blockchain access to tokenized shares that reflects the value of top American companies. The company confirmed the rollout of the interview with Bloomberg, adding that the tokens will be available essentially through a 24/5 through the essential Arbitrum blockchain is what they're essentially using first. The tokens are backed by real shares which Robinhood owns. Customers won't get voting rights, but they will still receive dividends and benefits from corporate actions like stock splits. These are full representations of the underlying equities just on chain. While traditional brokerages in Europe already essentially offer access to US stocks, tokenized versions allow it for instant settlements and greater transparency. This isn't a cosmetic upgrade. It removes the bottlenecks that usually slow down global equity trading. The Menlo essentially Park-based companies using Arbitrum, a layer 2 essentially network that runs on Ethereum to issue these tokens. But that's temporarily. The firm is working on launching its own layer 2 blockchain, which will eventually handle these transactions. Until then, all trades will settle on Arbitrum. Customers in the EU previously could only trade crypto through Robinhood. This is the first time they're getting access to US stocks, not through Wall Street, but through a blockchain. This isn't just about stocks. Robinhood also confirmed plans to launch essentially futures contracts for cryptocurrencies in Europe before the end of the summer. And these products let traders speculate on prices without expiry dates. This is part of the larger plan to expand the economy's crypto-based offerings for its European base. Earlier this year, Robinhood also completed the acquisition of Bitstamps Ltd, one of the oldest crypto exchanges in Europe that give them essentially a regulatory base and a foothold on the region. Bitstamps infrastructure is expected to play a massive role in how Robinhood essentially pushes both crypto and equity products to European audiences. And it's not only about essentially Robinhood's company moving in any direction. Kraken also, as I revealed previously on tonight's slide as well, is also doing the same maneuver by releasing Kraken Stock X, which gives full access to tokenization. US tokenization stock market giving access to US citizens and also now 30 European countries. All of this essentially reassures traditional investors that crypto belongs where it is and is essentially here to stay. And it is going to revolutionize everything around us, from the US stock market to any world stock market, London Stock Exchange, European Stock Exchange, to essentially any stock exchange around the world, any real estate market space around the world, any automotive industry around the world. That, crypto is here to stay. All of these movements that are happening, it reaffirms the crypto space's place inside of this world. Because I know for a fact that people that are watching this live show right now still have family members, friends, or work colleagues that still doubt the crypto space and think it's imaginary money that's going to go away. But what those people don't realize is day by day, the crypto space is integrating itself inside the traditional market space. And tokenizing the stock market is a big indicator of that. Now, what we're going to be talking about next is the EU and the US. So here it is. The EU and the US are gearing up for trade talks as tariff essentially threats looms. So Tariffs cause market movements that are unstable. It impacts the stock market, the crypto market, and so on. And this is the recent conversations that are going on. But just to point out, tariffs impact the crypto market space max 48 hours. The only one that went beyond 48 hours was the China and US situation, but that's only because China didn't want to back down. And it's a very big powerhouse. Here it is. The European Union is prepared to accept a trade agreement with the United States that includes a 10% uniform, essentially, tariff on many EU exports. Discussions are poised to unfold this week in Washington. If we get good news coming out of Europe and the US coming to an agreement on tariffs, it's a positive note for the crypto marketplace, the stock market, and so on. Crypto will react positively. Marco, EU Trade Commissioner, leads this endeavor to Washington, representing the EU's amidst raising stakes between the EU and the US regarding tariffs, affecting key market essentially sectors. The automotive and metal industries are central to these talks, as the US's existing 25% tariffs on cars and parts is a significant bone on this contention, essentially accompanied by a 50% tariff on steel and aluminum. The EU essentially proposes a quotes of essentially as possible solutions, seeking a more stable trade relationships. Investor sentiment is noticeably tense, while industries assess potential ramifications of tariff negotiations. Jaroslav von Der, president of the European Commission, has expressed dissatisfactions with the US trade threats, hinting at possible shifts towards other trade analysis, such as the CPTPP, the new essentially the new group trade alliance with the CTPP, would redesign the rule book of global trade, reaffirming or perhaps even replacing the global trade rules. Now, currently, Ethereum's pricing, Bitcoin's pricing, the crypto market space is doing well for itself, you could say. We're not, trending downwards in any sort of way. We're balancing, consolidating, going sideways. The trade negotiations often reflect a cycle of temporary volatility, minoring past EU and US tariff disputes during Trump's administration, with strides in essential financial markets without significant long-term crypto markets and shifts. The research teams that have looked into this indicate that if trade tensions escalate, indirect volatility may essentially seep into the cryptocurrency markets. Cross-border trade issues often essentially align with regulatory scrutiny, yet digital assets remain relatively unaffected beyond surface-level reactions. So, the EU is going to Washington this week. They're going to be having a conversation on tariffs. And what they're hoping happens is that Trump and the EU come to a conclusion and it's done deal. That there's no more back and forward, no more extending their tariff periods, and so on. It's a done deal, signed on paper. Both nations, or essentially one continent, can move on with their lives, and the other continent can also move on with their lives as well. That happens, crypto will react in a very, very positive way. Stock market will react in a very, very positive way also. So keep your eyes on the market space this week regarding EU talks with Washington. Now, Trump. On the topic of the United States and Trump. Trump urges the Federal Reserve to cut its interest rates to 1%. Now, we know for a fact that Trump hates essentially Jerome Powell, but who doesn't, to be fairly honest? That man is absolutely useless. The man in charge of the Federal Reserve is an absolute moron and needs to be removed. The same way Gary Gensler needed to be removed from the SEC chairmanship, the Fed chairman also needs to be removed. So 100%, I'm standing behind Trump's verdict of Jerome Powell needs to be removed, full stop. Every country around the world has done some sort of rate cuts to get close to their 2% targets and so on and so on. Jerome Powell hates Donald Trump, genuinely hates Donald Trump. And he's willing to jeopardize his career, his future as the Fed chairman, just to pull one on Trump. And he's also willing to damage the world's economy because he is the Fed chairman. And that if he raises, essentially, if he cuts interest rates, it impacts the world market space. As the International Monetary Fund put it, if the American markets sneeze, the world market catches a cold. The exact words from the Bank of International Settlements and the International Monetary Fund. So, here it is. Donald Trump has called upon, essentially, the Federal Reserve to lower interest rates to around 1%, citing concerns over current financial policies. The former president expressed his stance today on Fox News. He spoke in discussions on potential economic impacts. The request for an interest rate decrease could result in increased volatility across financial markets. Investors may react swiftly, translating essentially Trump's remarks into economic forecast. In a statement, Trump criticized the Fed Chairman Jerome Powell for maintaining artificially high rates, highlighting the vast economic differences essentially between the US and countries with lower rates. Trump's administration has essentially hinted at replacing Jerome Powell before his term ends in 2026, and there are more hints coming that he is going to be replaced by the looks of it. Apparently, Jerome Powell has been mismatching his money. A lot of money has been disappearing from his table, and it looks like that is what's going to push his hand to remove him from his position. It's the best way, you know. People like Jerome Powell, people who sit on very high-profile seats, especially if you're the Fed chairman, you're definitely crooked. There's no way around it. If you sit in a very, very high-profile seat inside the government, the chances of you being crooked is about 99.99%. I'd say 0.1% is pretty much the not crooked, essentially, group of people that work inside the government. But if you're a Fed chairman, if you're an SEC chairman, you're a chairman of anything, very high chance you're crooked. So I think Trump's just using that card of there's definitely something that he's done that if we dig up, it could help to remove him from his position. And the news is now coming out with Jerome Powell has been essentially misusing funds. That's what's going to get him removed from his chairmanship. And if he is removed from his seat, the market will feel the volatility because he is a Fed chairman. But afterwards, the person who's chosen to replace him, Scott Benson, by the looks of it, is going to be the person to replace him, is going to bring tremendous positivity for the crypto space, especially. Imagine having a pro-crypto person in charge of the Fed. The possibility of a replaced Fed chair has caused fluctuations in global bond markets. Trump calls for lower rates might resonate across numerous industries, spurring discussions on physical policy adjustments. Financial implications include potential reductions in the US debt, sovereign costs, and changes in the Federal Essential Reserve strategies. However, the market responses to Trump's critiques remains mixed, indicating potential economic uncertainties. Cryptocurrencies analysts suggest that looser monetary policies could positively influence cryptocurrency prices. The past events where rates were cut significantly saw spikes in these types of markets, the crypto market space, demonstrating the correlation between Federal Reserve actions and digital currencies. We should be at 1 to 2%, 1 or 2%, Donald Trump said, according to his own sources. I agree 100%. 100%. Jerome Powell is an absolute nuisance. He's absolutely useless, and he should be removed from his position. Good that they're finding and they're digging up dirt on Jerome Powell and using that particular method to remove him. Because obviously he's crooked. He's the Fed chairman. How could he not be crooked? That's the method they should have used day one instead of going through the Supreme Court. Now, moving on from that to EP323. And we're guessing it's a crypto project a lot of people have heard about. Well, the founder of the crypto project, EP323, is going to be joining BlackRock, Goldman Sachs, and a few others in shaping the CFTC's crypto rulebook. Avery Cheng isn't just shipping essentially code anymore. The EP323 co-founder and CEO has been appointed to the CFTC's digital asset panel, signaling a new era where those who build the infrastructure help shape its regulation. On June 30th, today, AP2OS Labs announced that its co-founder and CEO, Avery Cheng, was appointed to the Commodities Futures Trading Commission Digital Asset Markets Subcommittee. The group, part of the CFTC's Global Markets Advisory Committee, includes heavyweights from BlackRock, Goldman Sachs, Seattle, alongside key crypto industry figures like Polygon Labs' Rebecca and CoinFund's Christopher. According to AP2OS, Cheng will represent the builder's perspective in a policy environment still largely essentially shaped by legal and financial essentially members. His appointment suggests that the CFTC is actively seeking input from technologists who understand blockchain complexities, not just financial institutions who are trying to adapt to its disruptions. Avery Cheng's appointment comes essentially at a pivotal moment for crypto regulations. While the SEC keeps essentially swinging its enforcement hammer, the CFTC has been playing a different game, or you could say singing a different tune. The commodities regulator has steadily expanded its crypto oversight with a lighter touch, especially when it comes to its assets like Bitcoin and Ethereum. With Cheng now advising its digital asset market subcommittee, the agency gains direct access to technologists who has built blockchain infrastructure at scale. Cheng's background sets him apart from traditional finance essentially appointees. Before co-founding essentially AP2OS, he was a principal engineer at Meta for a project formerly known as Libra, where he grappled with the regulatory hurdles and launching a global stablecoin. That experience gives him a rare insight into both the technical and compliance challenges facing essentially decentralized systems. On the CFTC's subcommittee, Cheng will work alongside key figures like Nasdaq's Tony and Franklin Templeton's Sandy, bridging the gap between crypto disruptions and Wall Street's established players. While Cheng's appointee is new, AP2OS has been laying the groundwork for regulatory relevance, and the project was recently named the top blockchain candidate for Wyoming's essentially first fiat-backed stablecoin issued by a U.S. state. At the same time, Bitwise amendment filings for AP2OS-linked ETFs signal a growing institutional interest, even as the SEC delays its decision on broader crypto ETFs. This is not to mention that the Layer 1 blockchain already hosts a USD-pegged stablecoin, a factor likely sought regulators' attention given ongoing debates about stablecoin oversight. Cheng's first test may be a subcommittee's work on stablecoins and CBDC frameworks, which it began essentially standardizing in March 2024. So, the CFTC has invited another member to the table to get a perspective on the crypto space, on the blockchain space, and so on. Because they do have a lot of businessmen on the table, like Goldman Sachs, BlackRock, and so on, and Seattle, and so on and so on. So it's nice that they're essentially inviting some other, crypto like-minded people who are developers and so on, who understand the crypto space a lot more better. And so far they have from Polygon Labs, they have Rebecca, from CoinFund, they have Christopher, and from AP2OS, they have Cheng, who's sitting at a table for sharing their perspective of what should be happening inside the crypto space. Now, moving on from that to Germany. Germany's largest banking group takes a very historical step into cryptocurrencies. Some of you might have heard this news, some of you might not, but here is a bit more of a bullet point detailed version. Spoxken, one of Germany's largest financial groups, is preparing to offer cryptocurrency trading to its individual clients. Spoxken, which has previously kept its distance from this particular area, is thus following in the footsteps of essentially other banks inside of Germany. There's a few banks in Germany that are now involved inside the crypto space. The cooperative banks plan to launch crypto services for individual customers this summer. The Spoxen essentially will provide reliable access to regulated cryptocurrency offerings. The Deutsche essentially Spoxen and essentially DSGV said in a statement today, accordingly, individual users who make their investment decisions will be able to access cryptocurrency platforms offered by our investment institution, Decker Bank, via our Spoxen app. Spoxen's decision is driven by growing customer demand and the coming into force of the European Union's new crypto regulations under the MICAR. The service essentially is planned to be developed within a year, and customers will likely be able to start trading cryptocurrencies in the summer of 2026. Essentially, a Decker Bank spokesperson told Bloomberg, after essentially about 3 years ago, The spokesman group had made a decision not to offer cryptocurrencies trading to its clients. However, recently, the industry has been challenging its own approach. We should offer our clients the possibility of trading cryptocurrencies through our Deca Bank, said spokesman's chairman, and he essentially said this to Bloomberg. Meanwhile, Volks and essentially other German banks acting under the leadership of DZ Bank have developed a special crypto trading infrastructure for cooperative banks in Germany in cooperation with IT service provider, essentially Otrif and Stockholm Stocks Exchange, and this service is planned to be launched very, very soon. Although spokesman is preparing to enter the crypto space, it remains cautious. Our position is clear. Cryptocurrencies are highly speculative assets, yet, and however, they're still going to be launching into it. Day by day, we're getting more announcements of banks entering the crypto space. Day by day, we're getting more announcements of regulations happening around the world. Day by day, we're getting announcements of institutions filing for more ETFs around the world and getting more involved inside the crypto space. But believe it or not, as everybody might be essentially very, very focused on Russia or Ukraine or Israel and Iran or any of the war or any of the trade policy and tariff situations that are going on around the world, keep your eyes on the crypto space. Because day by day, banks, institutions, ETFs, ETPs, regulations are happening worldwide for the crypto space. Now, for moving on from Germany and to one particular country that we've only talked about maybe twice or 3 times on this live show, which is Kazakhstan. Some people might know Kazakhstan because of the Borat films, but Kazakhstan is a real country and also a very beautiful country, to be fairly honest, and very nice people. But here is the announcement, and why I'm sharing this news to you. You'll get a picture, or you'll get a glimpse of why I'm sharing this to you about in two seconds in. So Kazakhstan has announced national crypto reserve developments at their central bank. By the way, CZ, which everybody knows inside the crypto space, who was the founder, or essentially, of Binance and the CEO of Binance, CZ is the one that's leading this initiative in Kazakhstan. Kazakhstan's announcement follows a major crypto policy shifts worldwide in 2025. The United States, they said, this is why Kazakhstan is doing this, and this is why more countries are definitely following America's footsteps, including South Korea. But Kazakhstan announcement follows a major cryptocurrency policy shift in 2025. The United States established its essentially, its strict Bitcoin reserve and crypto reserve through presidential executive order that happened on March 6. The White House confirmed the reserves and the use essentially confiscated Bitcoins from the criminal proceedings, and the US Treasury manages these assets essentially as strict holdings without selling them. Multiple US states also essentially pursued similar initiatives at regulating levels, according to essentially the data that's coming out. 13 essentially states draft Bitcoin reserves and crypto reserve legislations for 2025. States like Ohio, Pennsylvania, Texas, and so on, the list just goes on, have proposed allocating up to 10% of their public funds. Texas plans accepting Bitcoin donations for state reserves. These proposals reflect the growing institutional crypto acceptance across governmental levels, and international examples demonstrate diverse approaches also to national crypto essentially strategies, with El Salvador holds essentially 6,210 Bitcoins worth approximately $659 million through daily purchases. The country adopted a Bitcoin as a legal tender back in September 2021. Bhutan, for example, owns 12,062 Bitcoins valued at $1.28 billion, primarily for mining operations. The United Kingdom, essentially, and other essentially countries around the world also hold certain amounts of cryptocurrencies that are also looking into creating some sort of crypto reserves from all the crypto essentially they have seized over the years. So, government crypto holdings now exceed 530,000 Bitcoins globally across various nations and jurisdictions. Countries increasingly recognizing Bitcoins and cryptocurrencies' potential as a strict reserve asset alongside traditional gold reserves. The trend has accelerated after essentially Bitcoin reached its new price highs in 2024 and 2025. Nations compete to establish positions before widespread institutional adoption increases and scarcity happens. Kazakhstan will establish a state crypto reserve managed by a central bank, and the announcement came from a national bank chairman, essentially Temir, during a parliamentary essentially proceeding that happened today on June 30th. The reserve represents Kazakhstan's latest step towards essentially integrating digital assets into national financial infrastructure. According to essentially Quazon Forum, The reserve will operate under national bank supervision through an affiliation, essentially, institution, and the concept includes comprehensive management frameworks for crypto asset storage and administration. And this has been confirmed essentially by their bank support and institutional approach to crypto reserve formations. And essentially, the approach follows international best practices for sovereign fund management. The reserve framework essentially addresses multiple operation aspects, and sources may include confiscated crypto assets from law enforcement actions, and state-operated mining facilities could contribute to essentially their national cryptocurrency to reserves. The national bank prioritizes transparency in accounting procedures and storage protocols. Management structures will ensure crypto asset safety through centralized institutional control. More countries are going to be following in America's footsteps on creating some sort of a crypto reserve and also using any confiscated cryptocurrencies they may have as a part of their reserves, which means more countries getting involved in cryptocurrencies. The better it is for cryptocurrency market, the better it is for us, because more liquidity comes to the table. And Kazakhstan is the newest country to join the wave of creating some sort of a crypto reserve. The EU has looked into it. Some EU countries have looked into it. The UK has also looked into the idea of a crypto reserve. America obviously has that crypto reserve. El Salvador has a crypto reserve. Bhutan has a crypto reserve. Dubai has a crypto reserve. Singapore has the ideology of a crypto reserve. Hong Kong is looking into a crypto reserve. South Korea is looking into a crypto reserve. Japan is looking into a crypto reserve. The list just goes on. And all of this happened because of Donald Trump. Because this man came into power and said, America, capital of cryptocurrencies. America needs a crypto reserve. The rest of the world listened and followed his footsteps. Now, on the topic of alternative money, gold and silver have become legal tender once again. Texas makes gold and silver legal tender following the governor's approval. Some Texas residents are already expressing skepticism about a recently passed law recognizing gold and silver as legal tender in the state, as well as the establishment of a transactional currency based on precious metals. On a post from the Texas Governor Greg, it was announced that he had signed a House Bill 1056, it's called Bill 1056, into law after passage in the State House of Representatives and Senate. The bill expected to take effect on May 1st, 2027. Amends the state government codes to recognize gold and silver as a legal tender for residents to use them in everyday transactions based on their essentially determined value at the time. Now, you might be thinking to yourself, first of all, why is Texas making gold and silver a legal tender again? And why 2007? And why 2027 is chosen as to when essentially gold and silver become legal tender in Texas? Well, 2 years ago, Barclays Bank, HSBC Bank, Lloyds Bank, Santander Bank, Halifax Bank, and a few other banks said that by 2027, there's going to be no more banks on the high streets. These are major banks: HSBC Bank, Barclays Bank, Lloyds Bank, Santander Bank. The list goes on. They said by 2027, there's going to be no more banks on the high streets, which is an indication of what? That it's going to be digital. The world is going to be digital by 2027. So why Texas announced that gold and silver will become legal tender 2027 is because of that very reason. Because once we go into a full-on digital world, it's going to be a CBDC world alongside a crypto world, alongside now in Texas, gold and silver world, where crypto will be legal tender, CBDCs will be legal tender, and so will gold and silver in Texas. So that people have an alternative. If they don't, I'm guessing, have any access to cryptocurrencies, at least they can use their gold and silver as legal tender. if they don't have cryptocurrencies. So they're not going to be stuck on CBDCs. You could just say that Texas is looking after its citizens, and that is why they have chosen essentially 2027 as that deadline. Because, just going back 2 years, what HSBC, Barclays, Lloyds, Santander, and all that said was there's going to be no more banks on the high streets by 2027. Texas is going to make gold and silver tender by 2027. Well, in 2027. And for residents to use them as everyday transactions, essentially based on the determined value at that time. Now, Abbott cited a clause in the US Constitution stating essentially that no state shall make anything but gold and silver coin a tender in payment of debts, though the law would essentially not prohibit Federal Reserve notes or other US currencies for using legal tender in Texas. The law would also not require any person to accept gold or silver for the payment of debt, for deposits, or any other purposes, but gold and silver will be used as legal tender. Under the Texas governor and Republican-led legislators, the U.S. state governor has moved forward with some bills proposing the adoption of cryptocurrencies. On the same day, he signed a bill 1056 into law. Abbott approved legislation for the creation of a strict Bitcoin reserve. The United States has been essentially off the gold standard for day-to-day domestic transactions since 1933, when President Franklin D. Roosevelt signed an executive order requiring people to return gold coins and gold bullions and gold certificates to the Federal Reserve. Though individual states like Texas have been exploring the adoption of a different asset that essentially they are barred from issuing notes and coins under the Constitution. News outlets have suggested that the establishment of a transactional currency could allow Texas to recognize digital currencies backed by gold or silver as legal tender. Some residents also, however, questioned the essentially early attempts by legislators to pass similar legislations, citing concerns for their retailers. How is the retailer going to protect themselves and be able to ensure that their gold and silver coins is authentic and not a counterfeit, said essentially Reddit users? And so many of the users are coming out and saying that Texas trying to make gold and silver legal tender is a stupid idea, and some people are coming out and saying it's a good idea. Time will tell if it's a good idea or a bad idea, but the deadline is an interesting timeline. On the topic of CBDCs, in a world that's going to be filled with CBDCs by 2027, a lot of people thought to themselves that CBDCs is old news, that CBDCs won't be happening, that we're actually moving into a world of stable coins and cryptocurrencies and so on, and that CBDCs are old news. It's never going to happen, is what some people might think to themselves in this day and age. Not really. Because do you know who is worried about CBDCs taking over completely? JP Morgan. Here it is. JP Morgan rates Circle initiates coverage target $80 by 2026. Why is JP Morgan doing this? Well, JP Morgan has officially initiated coverage on Circle, the payments and stablecoin focused company based USDC coin, Circle. The banking giant JP Morgan delivered a cautious verdict, underweight, with a price target of $80 by December 2026. This rating signals JP Morgan's expectation that Circle stocks may underperform relative to a broader market through the end of 2026. Why is JP Morgan saying by the time we get to 2026 that Circle is going to be underperforming? Circle just got their essentially stock inside the market space. USDC, Circle, Coinbase, Black. They just made it to the stock market. So why is JP Morgan saying things are going to change by the time we get to the end of 2026? Well, the key risks that are highlighted from JP Morgan is this. Emerging competition. From who, you may say? JP Morgan emphasizes that new market attacks and alternative stablecoin providers could reduce Circle's market share over time, which is true. Circle's competitors, believe it or not, USDT, in my point of view, is not going to be approved inside the United States unless Tether tries to pay their way through, which makes sense on essentially what Tether's recent announcements, where they said they made $5 billion investments inside the United States, and it's just their way of saying we should be accepted inside the United States as a stable coin as well because we made $5 billion investments. But there's bigger issues with Tether, which is it's not a US company, which means it's going to struggle heavily to be approved by the United States as a stablecoin because they've moved their headquarters to El Salvador for some oddly reason. It's very easy for Tether to be accepted as a stablecoin inside the United States. Move your headquarters to the United States, and then you could be green lighted. Now, the reason why Tether won't do that is because I'm guessing what's on paper won't match to what's on display. So JP Morgan said that Circle is going to struggle because of competitors in the stablecoin space, and that Circle's market share over time could essentially reduce. As more players enter the digital asset space, Circle faces increasing pricing pressure and client acquisition hurdles. What else is JP Morgan scared of when it comes essentially to stablecoins? Because everybody presumes, not everybody, but a majority of people essentially inside the crypto space presume that what Ripple was working on, CBDCs, is something that nobody will use, is what people would say, essentially inside the crypto space. Nobody's going to use CBDCs, everybody's going to use stable coins and so on. That's not really true. And you might think that, but according to JP Morgan, not really, because according to JP Morgan, this is what they said. Central bank digital currencies, CBDCs, with governments exploring their own digital currencies, Circle could see demand for USD coin shrink as users shift to official CBDCs. So even JP Morgan is coming out and saying that they see the future we're heading towards inside of this digital world is not going to be crypto and stablecoins only. It's actually going to be the bigger portion of the digital world is going to be CBDCs. 98% of centralized banks are still in CBDCs. For anybody that thought CBDCs have, gone away and what Ripple's been working on all these years doesn't really matter because nobody's going to use CBDCs. 98% of centralized banks are still in CBDCs, and that's according to the Bank of International Settlements and the International Monetary Fund. And also according to JP Morgan, CBDCs are going to take over the stablecoin market space, and that JP Morgan suggests that a widespread CBDC adoption may weigh on the growth of stablecoins, or in this case, Circle's business, which is stablecoins. So even according to JP Morgan, what's going to be happening next, the takeover is essentially is CBDCs. He said for investors, the underweight rating signals caution. JP Morgan's analysis suggests that Circle may struggle to maintain a strong revenue growth and market positioning in a more crowded crypto environment. The $80 price tag, presumably below current trading levels, reflects these concerns. However, bullish investors might view this as an opportunity if Circle continues expanding its stablecoin adoption, forges a stronger partnership, or finds new revenue channels. The downside risk identified by JP Morgan can be mitigated. I just want to put it out there to all of the investors out there who thought to themselves that, if Circle continues expanding its stablecoin adoption, forging stronger partnerships, or finds new revenue channels, it could, downside the risk that JP Morgan is talking about. Do you not think for even a second that JP Morgan might have considered, even if Circle continues expanding its stablecoin adoption, forges stronger partnerships, and finds new revenue channels, it still won't be able to compete in the digital world that we're heading because it's going to be mostly reliant on CBDCs, then stablecoins, and then cryptocurrencies. Now, on the topic of CBDCs, and on the topic of essentially Ripple, who leads essentially the XRP ledger that leads the CBDCs, Ripple that leads the CBDCs, and by the way, there is no other blockchain company out there that has multiple awards for CBDCs. Ripple has awards for their CBDC ventures. Awards. No other blockchain company has awards for CBDCs. Now, XRP Ledger launches an EVM-compatible sidechain with DeFi support. The launch of an XRPL EVM sidechain is significant for expanding cross-chain DeFi capabilities on XRP's utility, as reported by Ripple. Ripple, in partnership with Percent, has launched the XRP Ledger's EVM-compatible sidechain, which essentially facilitates the deployment of EVM-based applications, according to Ripple themselves. The sidechain is designed to preserve XRP Ledger's efficiency and reliability while enhancing DeFi interoperability. David Schwartz, the CTO of Ripple, highlights the sidechain's capacity for developers to deploy EVM-based applications effectively. Percent, known for its blockchain expertise, collaborates closely with Ripple in this venture. Now, this partnership with Percent, essentially, Ripple started a very long time ago. But you fast forward to today where they're launching these types of features. The XRP Ledger's EVM sidechain introduces a flexible environment for developers to deploy EVM-based applications while maintaining essentially a connection to the XRP Ledger's efficiency. It extends the capabilities of the ecosystem without changing of the fundamental ecosystem, and essentially that makes the XRP Ledger reliable, said David Schwartz, the CTO of Ripple. Axelar's involvement also provides interoperability with over 80 blockchains, branding the cross-chain DeFi participation. XRP acts as the native gas token on the sidechain, bridging essentially significant liquidity and increasing XRP Ledger's wallet holders' participation. Ripple's initiative is essentially anticipated to significantly boost cross-chain DeFi markets, enhancing XRP market rules, and the launch may lead to increased liquidity flows and TVL growth within the sector. Past events such as Polygon's EVM launches demonstrates potential for rapid growth and technological integration within ecosystems. XRP Ledger's native gas token usage indicates reduced fragmentation risk and increased efficiency in real-world asset integration. Insights suggest promising financial technological prospects, with Axelar ensuring extensive reach. Ripple emphasizes that increased speed and reduced cost essentially position this sidechain favorably for essentially developers and market participation. Also, on a side note regarding tokenization, the XRP Ledger regarding tokenization, if you go to essentially RWA.xyz, which is essentially the renowned platform for checking out market data for real-world assets and essentially where each cryptocurrency ranks, XRP is climbing on the 30-day essentially market space 34%, while as every other token is climbing 1 to 2%. With one other token climbing significantly well for itself as well, but XRP Ledger is climbing 34%, jumping 34% in tokenization. And that's according to the data from realworldassets.xyz. So rwa.xyz, everybody can check it out. Now, also on the topic of Ripple, Ripple's CTO reviews XRP Ledger's institutional takeover plan. Ripple's Chief Technology Officer, David Schwartz, unveiled a compelling vision for the future of the XRP Ledger. In his remarks, David Schwartz outlined how the XRP Ledger could become a foundational platform for merging regulated financial systems with the open infrastructure of decentralized finance. David Schwartz also explained that institutions can build highly regulated financial instruments, such as portfolios or real estate or commercial loans, that still have the ability to interact with decentralized systems. The idea that institutions can build things that are very strictly, very tightly regulated, but can essentially interport with DeFi systems, he said, reflects Ripple's vision for financial systems that are both compliant and decentralized. He described a scenario where a traditional lender issues regulated loans, which are then tokenized and made available to a wider audience through DeFi. You might have essentially regulated lender who issues very traditional loans and real estate or commercial loans. He noted that you might have tokenizations of the debt that everyone can hold purely through DeFi systems. This model enables traditional financial assets to be fractionalized, represented on sidechains, and traded essentially globally, while also remaining rooted in compliance. In essentially positioning the XRP Ledger as a key infrastructure layer for tokenizing real-world assets and unlocking essentially liquidity across the borders. To reinforce this vision, David Schwartz drew a powerful comparison to the rise of the internet. He noted that the web didn't grow solely through grassroots innovation. It was fueled by early essentially adoptions from governments and the military, which in turn supported wider public commercial engagement, which is true. The internet essentially caught on after the government and the military used it as a widespread operation, which then caught on to the public engagement. But now you fast forward to today where essentially it's the public that's, pushing this agenda of this digital world, and with the governments jumping on the bandwagon, and essentially with the banks, institutions, and everybody else. Although they make it look like that, but there's a different story behind it. If you look at the way of the internet grew, said there was a government and a military adoption that enabled grassroots operations and built the system. David Schwartz argued that the synergy between institutional involvements and open innovation is what truly drives large-scale sustainable growth. The synergy is what builds something that can be dominant and that can grow, he added. According to David Schwartz, the XRP ledger is uniquely designed to support this convergence, its ability to issue and manage assets natively, its speed and low cost, and its growing interoperability features make it essentially an ideal platform for this new hybrid financial era. We see that the corner, he said, we see the XRP ledger being blockchain where those kinds of use cases can work. David Schwartz captures more than just a technical forecast. It reveals Ripple's broader institutional strategy by enabling regulated financial products to operate seamlessly within DeFi environments. Ripple is positioning the XRP ledger as a core infrastructure for the next evolution of global finance, which is facts. It's also what essentially Brad said. Brad Garlinghouse, essentially from Ripple, stated in his own words just recently, 2 nights ago, 1 night ago, that essentially with the whole case situation, they're both removing their appeals, and that Ripple's next essentially focus is going to be building the future of finance. David Shaw's talking about how everything is essentially going to be on the XRP ledger, and the next evolution of global finance is going to be on the XRP ledger, and the commercial real estate and private real estate and everything else to do with it is on the XRP ledger. Just want to point this out. A while ago, about a year or 2 years ago, David Schwartz did state in a statement once that, essentially the XRP ledger is going to become like the Google of the blockchain space, where everything will be connected to it. And it is turning out that way. Also, on that note of what essentially David Schwartz has said, what the news went from regarding Ripple, and everything else that's happening around the world, which we covered on tonight's live, we have reached the ending of tonight's live. This was the CMF Live. This was episode 323 of the CMF Live. If you're watching this for the first time ever, the CMF Live stands for Crypto Miles Family. My name is Miles, and I host this live that you're watching. You can tune into this live Monday to Friday, 10 p.m. London time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, and so on. If you want to be updated about what's happening in this digital world, tune into this live Monday to Friday, 10 p.m. London time on X Live or on YouTube Live. Also, if you subscribed to me and followed me during this live, thank you so much. If you liked this live, retweeted this live on X, and put a comment outside the live, thank you so much as well. If you like this live and you're watching us on YouTube, thank you so much as well. And on tonight's live, we covered quite a bit of interesting news as well. But we covered Ripple news regarding David Schwartz's plans for the XRP ledger. We covered essential news regarding XRP ledger's launches of EVM compatibilities. We talked about JP Morgan fearing a CBDC world is on the rise. We talked about essential tonight's live regarding Texas making gold and silver a legal tender, essentially in 2027. We talked about Kazakhstan following America's footsteps, Bhutan's footsteps, essentially Dubai's footsteps, Japan, Hong Kong, South Korea, and so on. We talked about tonight's live also regarding Germany's largest bank getting involved inside the crypto space, because now they're seeing it as a market space that they cannot be left behind from. EP323's co-founder Cheng joined essentially the CFTC on sharing perspectives. We talked about Trump urging the Federal Reserve to cut interest rates by 1%. We also went through news regarding the EU and the US gearing up for trade talks and tariff talks in Washington this week, which is going to be impacting the crypto market space and the stock market. We also went through news regarding Robinhood essentially launching a tokenized US stock trading in 30 European countries on tonight's live. We also went through news on tonight's live regarding the dollar-backed stablecoins in South Korea that's happening right now, other regulations. We talked about the IRS, being able to collect Coinbase user data without any sort of warrants or letting people know about it. We went through news regarding the first US staking ETF that could possibly launch very soon for Solana. We went through news also regarding Kraken X stock essentially launching of these revolutionary US stocks that are tokenized, 60 US stocks. We also went through news regarding Senator Luminous's proposed essentially Bitcoin mining corporation tax, and stablecoin legislation gains essentially momentums for potential mid-July completion that we could have stablecoin regulations by mid-July. We talked about that on tonight's live show also. And we went through Trump news regarding other tariffs, other taxations, and China news also. So those are all the news topics we covered on tonight's live. It's great to be back, honestly. I got tired of sitting on the sidelines waiting for doctors to give me a call regarding my illness. I didn't want to sit on the sidelines and watch everything happen and not, be there for the CMF and to inform everyone of what's happening, essentially. So, I got tired of sitting on the sidelines and just waiting for doctors' phone calls. I wanted to be back. I'm back, and it feels great to be back. It feels great to see all of you inside the comment section right now. And tune in tomorrow for the next episode of the CMF Live, which is episode 324. Before we obviously do go, let's go inside the comment section first, and then we'll go. There's an okay, we were here. Afternoon, Miles and CMF. Glad you're back. Let's go, Semper. Mike says, "Good day, Miles and CMF. Good to see you back, Miles. Just don't overdo it." Let's go, Mike. Do you think the XRP spot ETF will be passed before October? Which month do you think will be passed? I think it's a possibility. I believe the XRP ETF should be passed this year. The case should be done this year. The ETF should be passed this year as well. And will the stablecoin benefit XRP? It will benefit RLUSD, which will benefit the XRP ledger, which will benefit XRP, which will have indirect value. So yes. Miles, I messaged you on here, and could you check your DMs, please? Yes, I can, Shank. Do you want me to check it now, or do you want to check it later? Okay, I'll reply to you. I'll reply to you after this live, short, no problem. Hi, Miles and family. Alex, good to see you. How you doing? How you been? Great to see you back, Miles. Great live. Good night, Miles and CMF. Thank you, JD. See you tomorrow, sometimes usual. Night, Miles and CMF. Pablo, see you tomorrow, sometimes usual as well. Good night, Miles and CMF. Great news. See you soon. Free Feather, see you tomorrow, sometimes usual as well. Mike, good night, Miles and CMF. Hope to see you tomorrow. Let's go, Mike. See you tomorrow, but sometimes usual. Thanks, Miles. Was nice to have you back. Good night. Let's go. See you tomorrow, sometimes usual. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Ian, see you tomorrow, sometimes usual as well, brother. Thank you a bunch, Miles. Have a lovely night. Oh, let's go, Lena. See you tomorrow, sometimes usual. Good night, Miles, and all the same. Thank you for a great live and news. Let's go, JP. See you tomorrow, sometimes usual as well. So good to have you back. You were missed. Take care and see you same time tomorrow. Good night, Miles. See you tomorrow, same time as usual. Autistic. Night, Miles and CMF. Amazing show as always. Look forward to seeing you tomorrow's show. Let's go, Joe. See you tomorrow, same time as usual. So great to have you back, Miles. Best wishes for your health issues. Night and day, CMF. Let's go, Shelly. See you tomorrow, sometimes usual as well. Glad you're okay and back with us, Miles. Let's go, Ian. See you tomorrow, but the same time as usual. Good night, Miles. Good night, CMF. Tanner, see you tomorrow, but the same time as usual. Thanks, Miles. Good night, Shark. Let's go. See you tomorrow, same time as usual. I will see everybody tomorrow, same timing as usual, 10 p.m. London time. Tune in tomorrow, everyone. 10 p.m. London time for episode 324 of the CMF Live. Thank you again. Once again, thank you for everybody who liked this live, who retweeted this live on X, and thanks so much to everybody who liked this live on YouTube as well. And thanks so much to everybody who subscribed and followed. I'll see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow, same time as usual.